American Airlines reported better than expected earnings for the second quarter. Like other carriers, demand is strong at the world's biggest airline, and that is pushing up average fares, fees, and overall revenue. Meanwhile, the company's CEO says American is not backing off its fight to stop the growth of Persian Gulf carriers in the U.S. Phil LeBeau reports from Fort Worth, Texas, where American is headquartered.
For American Airlines, business is taking off thanks to strong demand and an industry-leading ability to drive greater passenger revenue. In fact, revenue per available seat mile is up almost 6%, in part because about half of the American passengers who buy a basic economy ticket are paying more to upgrade to a main cabin seat, where they have more options to choose from.
We had revenue growth, unit revenue growth, of almost 6%. It's more than the industry's up. It's evidence to us that the investments we're making in our product and our people are working.
2485.
For Parker, the profit and performance his team posted last quarter should mean fewer headaches for American. But that's not happening thanks to Qatar Airways. The Middle East carrier wants to buy up to 10% of American, even though Parker has repeatedly criticized Qatar for using government subsidies to expand flights to the U.S., a practice that Parker says has hurt American and other U.S. carriers.
We'll see where this all ends up, but the reality is those three carriers are subsidized by their governments, and they're competing against American Airlines and other U.S. carriers in an unfair way, and it shouldn't be allowed.
While American pushes back against Qatar, its core business remains strong, with a healthy economy driving demand and international travel not slowing down. And even as costs rise, due in part to new labor contracts, Doug Parker believes American is poised to fly even higher as it heads into the remainder of this year. Phil LeBeau, Nightly Business Report, Fort Worth, Texas.